What's going on? Money Morning Live. 8-ball was great, but we're moving on to power profit trades, talking a lot about cryptocurrencies today with Tom Gentile. Let's bring him in 5, 4, 3, 2.
Hey everyone, happy Monday. Tom here. Welcome to Power Profits Trades. It's our Monday edition. That's Microcurrency Monday, so glad to have you here hanging out here with us. Monday, February 7th. Wow, we're already into the second week of February. And today we're going to talk about how to navigate this crazy market here that we call cryptocurrencies. I want to do a rundown of the top 5 names in my microcurrency trader portfolio. This is really to kind of show you what we have been doing over there. There's some green on the screen, and it's been shooting up with this market coming back. All right. We're going to take a look at the charts of our blue chip cryptos. I'm talking Bitcoin, Ethereum, and we're also going to see what's going on in the NFT market as well. And of course, I'm going to answer some of your questions right off the chat. I want to make sure everybody knows we got a lot of people in here today. And so I got to make sure to apologize ahead of time for those of you that I don't get to in the chat room. There's nothing against you. It's just we got so many people in that are wanting to chat it up today in this market. So we're going to pull some questions, some more of the popular questions off the chat and ask and answer those. So, hey, Eric, how you doing this morning? What's happening?
I'm doing great. Listen, I'm into the crypto stuff, and I love seeing green. So today is a good day for me. I'm excited to jump into it for you right off the weekend. Hope yours as well, and everyone else that's in the chat.
Yeah. Did you get any more storms? I heard another storm was heading your way.
Man, we had so much ice. I'm still chipping it off of the sidewalks. It's brutal, but it's winter. So winter in New York, it gets icy.
Yeah, we're I think we're getting down to the 50s, maybe even the 40s. But
I'll take that.
I really don't want to squeeze it to you or anything. But yeah. I mean, I'm wearing the long sleeve stuff now, but nothing like you, my friend.
That's the air conditioning.
It is. Well, let's see. We had no football this weekend. We had, hey, the Olympics started. That's kind of cool.
I was watching a little bit of that.
Yeah, of the Olympics, I absolutely love the Winter Games. I don't know why. I just think that they're, I don't know. I mean, maybe I don't know if it's more talent. I like the winter sports. I like the snowboarding. I like the skiing. I like luge. I even like curling. I was actually, trolling around on some websites looking for a curling tea kettle for my wife. Because they have them out there, man. I mean, the only time I look at curling is about once every 4 years anyway. So anyway, and I know there's some of you out there that you're like, curling? Yeah, I like watching it once every 4 years. But it's not something I'm going to watch every weekend. Let me tell you what I did see this weekend, though. I saw Bitcoin come off of a fantastic Friday. And if you guys remember, and I'm going to bring this up again in a few minutes, but if you remember last week, what did I say? What did I say, Eric? I said we needed to get above, and we needed to close above for 3 days at least, above the 40,000 mark for Bitcoin. So here comes Friday. Boom. Big Friday jumping in. And then I thought, this is setting up for a really nice weekend because we should hold the line, the 40,000 line. Well, boy, did we hold it and then some. We'll get into it, guys. I'm excited to share with you my next resistance points on Bitcoin. There are 2 of them that I'm looking at. We'll talk about those here today. But let's back up a little bit. January, tough month for the digital asset market. Wouldn't you agree, Eric?
Yeah, it was a rough month. I wasn't the biggest fan of that month, but hey, we're coming off of it right now. We're going to look at that in the market update.
You really go back to the end of January. It started January, things were not that bad, and then it was just this huge sell-off, and nobody wanted anything to do with cryptocurrency, Bitcoin, Ethereum. They threw them all out. And of course, I wanted something to do with them. In fact, I put $100,000 into Bitcoin live on this show, right on the mainstream. I did it on the right here at Money Morning Live, and I didn't buy the low. Okay, I'm very few times in my life have I ever been a bottom picker. meaning grabbing that bottom or selling that tippy top. It just doesn't happen, folks. The probabilities of getting struck by lightning are probably more, you're more likely to have that than to buy the low or sell the high of cryptocurrency. But I bought on the way down. I was in around the 38.5 level, 38.6. I watched this go down to 33 or 33.5, something around that nature. So I saw mine drop 5,000. I saw Bitcoin drop $5,000 below my latest purchase price. And again, we'll take a look at that when we do our setup. But I mean, the cryptocurrency market had a big drop down. Here's good news. Throw our BTC to USD chart up on the screen there, Eric, because the market regained about 162 billion with a B in market cap through yesterday morning. I mean, like I said, it wasn't just Friday, but the action it continued. Not so much on Saturday, but on Sunday it did. And of course, again, today we're seeing even further upside. We'll get into it here on real-time charts in just a moment. But hey, whether it's to the upside or downside, volatility has been kind of the consistent or constant theme in this market. We've discussed this before, folks. I mean, there are times when the crypto market starts to resemble the equity markets in some ways. If you take a look at Bitcoin and say the NASDAQ index for one, that's one way to look at it. So you could look at that, but you know what? This weekend we had a bit of, let's just say Bitcoin and the big boys kind of jumped the rails in the last week. And so, if we take a look at, say, the volume on Bitcoin, on Ethereum, on Cardano, those are really our blue chip digital assets, right? So that's the first piece I wanted to mention to you. Next thing is, we were talking about, there was an article that came out. I think it was in the Economic Times. Is that right, Eric?
I'm not sure where it was from. We're talking about the blue chip coins and missed volatility. Yeah.
That's it. Yeah, that was it. Blue chip, cryptocurrency investors rush to blue chip coins amidst volatility. Do you know why? You could search on this till you're blue in the face. Why were traders going in? Why were we seeing whales buying at and below the 40,000 mark? Because they saw value. They saw Bitcoin drop 40 to 50% since November. They saw Bitcoin as a value asset. When you were looking at that versus tech, when you saw Bitcoin drop down, and really did it the third week of January, it dropped down hard, and yet tech was still kind of moving along. It looked like a very interesting arbitrage opportunity if you were looking to buy one and sell the other, or looking to buy one against the other. So I found that pretty interesting, but that's the headlines that we saw. I think Bitcoin is still on sale even today, guys. All right, we're going to get to the charts in just a few minutes. Let's start off, Eric, talking about Microcurrency Trader. All right, so Microcurrency Trader is my premium service that I offer, and I want to show you our top 5. All right, this is our top 5 Microcurrency Trader coins as of Sunday. Call this your watch list. All right, it's been our watch list. It's been our alert. It's been our trade list here for the most recent. There's a lot of green on the screen, and it's technically the top 6 because down at the bottom you see Maker on here twice, but we actually had 2 buying opportunities in Maker. So let's just go through these real quick. So I got KNC, that's Kyber Network at the top. And you can see the entry price there, $1.77. Today's price, or this is as of Sunday, $2.10. Might actually be up even a little bit more this morning, if we were to look at these real time. But I'm going to give you the coin symbol. You look at them for yourselves. But we're up 19% on KNC. Ethereum, we actually had an Ethereum buy alert that went out to our premium services. That was on the final day of January. That was just a week ago when Ethereum was at 2660. Where's Ethereum right now? It's over 3,000. I mean, we had it pegged at 28 or 29.89 last night, 12% gain, 12.5%. Cardano, Not at the levels that I love it at, but our most recent buy was there at January 24th at 106. It's at 114, probably a little bit higher today. Same goes with Matic. All right. Matic was a coin that purchase that we had that happened at the end of November, and it's up even with November, December, and the January plunge that happened. Matic is up, and then we've got Maker up slightly. All right, we've had a couple of buying opportunities in Maker, and I think Maker's just getting started as well. 22, 26, 34. That was our most recent buy alert, up about almost 2.5%. All right. So, when you look at the grand scheme of things, folks, sometimes it's about Bitcoin, sometimes it's about Ethereum, and sometimes it's about picking these smaller coins that are showing buy opportunities. And, if you don't know my buying opportunities, and I'll share them with you right now. Okay. We'll bring them up a little later in the program, but for right now, if I were to just kind of gel them out real quick, what do? I look at the long-term view of the coin itself and the overall assets. Look at the blue chips. What are the blue chips doing? They're kind of a guide, all right? And I say that as a rule, but not the exception, but it is a guideline for the smaller coins. Because again, a rising tide lifts most boats in the cryptocurrency space. Look at the rising tide that's happening today. It's Bitcoin. What is it doing? It's helping to lift the boats out there that are other currencies, all right, other coins. That's the first thing we do. The second thing I look for is rules-based strategies. One of the rules-based strategies we use is something called currency waves, where we look at long-term and short-term currency waves, and we look for buy crosses and sell crosses on those waves. Those waves are different. They're individual. They're like a fingerprint on each coin. So each currency wave, long-term and short-term, is going to vary between one coin and the other. And then finally, what we look for, and I really love when we get these, are our darknet buy signals. Darknet is kind of like Elliott Wave. It is a contrarian strategy. However, the one thing that we love about darknet is our signals are true, whether they are winners or whether they are losers. They don't all of a sudden change. They don't disappear. All right. So you see the losers out there too, because losers are really important in the game of what I like to call rules-based trading. The one thing that sets the rules-based trader apart from everybody else, whether you're a fundamental trader or investor, whether you're a technical trader, okay? There's a lot of technical traders out there that say, yes, I'm a rules-based trader. Really? Are you? Because you need a certain amount of data, let's call it 5 years, to back test some of these coins, all right? If you don't have that, you're not a rules-based trader. You're an analyst. A rules-based trader will back test a strategy, call it currency waves or call it darknet or whatever it is that you look at, and be able to take an objective set of rules and back test those rules to see how well your pattern, for what it's worth, did in the past. And what I like to see is patterns repeat themselves over and over and over again. Those are the types of patterns that we use in microcurrency trader. So when we're looking at Bitcoin, when we're looking at Ethereum, I look at those on a long-term scale. As many of you know, I'm a long-term buyer and holder of some of the blue chips. All right, I've got a handful of blue chips in my pocket, and so that's what I'm looking at. I am looking at Fibonacci to give myself some buy entry points. I'm not buying it here or buying it there because it looks good. I dare to say, do I buy Bitcoin and Ethereum once a month as an investor? No, I buy at key points, key critical points is where I buy. That's what I do as an investor. So again, we're going to look at blue chip assets. Before we do, though, let's get into some headlines. So let's talk about headlines first.
Yes,
so Eric,
sir. Yeah, I actually have
headlines for us.
I have 4 headlines for us, and I'm giving us 15 minutes to cover them. The first one here is about Miami announcing that it cashed out of some Miami coin as the crypto markets are down. Now, I'm sure it just wasn't them. A lot of people were cashing out of different cryptos. So what do you want to talk about that headline?
Yeah. So, I'm a Florida man. Let's get that straight. All right. I spend the majority of my time, let's call it 183 days a year in Florida. All right. And minimum of 183 days. There's a reason beyond that. I'm sure some of you can, hey, if you know the answer as to why I spend at least 183 days in Florida, put it on the chat. All right. I'd love to see if you know why I do that. But the big thing is this: I'm on the west side. We're on the slow side of Florida. Okay, we're on the sunset side. I'm not on the sunrise side. I'm a late sleeper. I go to sleep late. I get up late. All right. Now, for me, late during the mornings is probably before 9 a.m. On business days, on days the markets are open. But if you guys know anything about me, I'm a 2 a.m., maybe 3 a.m. Sleeper. So that's what we do on the West Coast. So here, I look at Miami. I look at Miami coin, and gosh, the cash outs, Eric. Here's the problem. And this doesn't just go with the retail, but even folks like the mayor who tweeted out they took a disbursement over $5 million, right? It was paid out to them in fiat currency. I don't think it's the right time to cash out. In fact, I would imagine as they were getting out of cryptocurrency. Now, I'm not trading Miami coin. All right, let's get that straight. But they were pulling out of Miami coin the same time Bitcoin was going lower. So it's possible that as they were getting out, I was getting in. I don't know if it was down to the exact day, but these news reports come out a couple of days or even weeks after, because it takes time to get a news report together, fact check if that's even possible anymore, and going through that. So here's the thing. I think they got out at the wrong time. I think me getting in was getting in at the right time. Eric, what do you think?
I agree with you. Honestly, I don't know much about that coin either, but I did notice that almost every headline we have is about Florida in some way. And let's move on to this one. South Florida. According to the new reporting by the Miami Herald, the digital wallet earmarked for the city went from 29 million in value to as low as 13 million in value. While it's unclear when the city exactly cashed out, it's up to the city officials to pick when to do so. Now we have a quote here from a crypto expert. The markets have taken a big dip, and to sell now is telling me there's no one who is acting as a fair fiduciary for the people of Miami, said Kurt Wuckert Jr., a crypto expert.
Yeah. Let me add to this story a little bit more before we jump to the next one. A while back, USA Today did a poll where they asked, it was economists. There was a group of economists. There was a group of CEOs. There was also a group of garbage men. They asked this question. They asked several questions on the economy, the stock market, what was happening with not crypto assets. This was before crypto. But I remember the story because what they did was they were analyzing who was right, who had the best predictions and who had the worst predictions. In order, Eric, the CEOs got it right the first time. These are the heads that basically run the private and public businesses out there. All right, they got it right. Garbage men came in second place in terms of what they believed the economy was going to do. Now, I'm not sure why. Maybe it's because these guys are on the street. They see things that happen every day. Maybe they're going through the CEO's garbage and they're able to get some notes. But the big point is that the public, and more importantly, these analysts that do not have skin in the game, came in very close to last place when it came to predictions, forward predictions. And I imagine that Kurt Wuckert Jr., the crypto expert there, he's probably right on this. All right. We're going to make, if he's the expert and the fine folks in the city of Miami are the ones making determinations, which are not experts in the crypto market, they're probably going to get it wrong. And so you got to think about that. Hey, that next headline in Florida.
Yeah.
How about this?
Yeah. This is, I mean, NFTs, they're crazy right now. We're going to talk a little bit more about that. It says this Tampa Bay home is being sold as an NFT. I'm going to pop it up while I read this, actually. It says the Golfert house will sell at auction. Where are we here? Will sell at auction next week to transfer the property rights instantaneously over the blockchain in the first for the region and maybe for the nation. So NFTs selling as a house, honestly, I don't even understand how this is going to work. I don't know how you feel about it, Tom. I don't know that you're not the biggest into NFTs, but man, that's something different for sure.
Yeah, the first thing that comes to my mind is Tom Brady selling his house in Tampa and trying to finagle some sort of an NFT piece. That would be news. That if Tom Brady were selling his house in the Tampa Bay area, and then he were going to somehow include some sort of NFT, whether it is artwork of the house with him and his family incorporated into it as a one-off or whatever, that sounds like something that would be really cool that would gain a lot of notoriety, especially off of his retirement news last week. But
yeah, that would make more sense, right? Because right now everyone knows NFTs as some type of a digital artwork, but selling the house as part of the blockchain, it's super weird because it's an actual thing. But we do have a little bit more on NFTs on this next headline. If we move on to this one, it says NFTs are relatively new, and it's hard to say how this could work in the future. There could also be challenges with cryptocurrency volatility. It's not clear if the value of a house tied to an NFT could be affected by the crypto market. So that's interesting as well, like the house value being as volatile as the crypto market. I mean, right now things are up. A week ago, Ethereum was down to almost 2,000. Now it's over 3. I mean, that's fairly volatile if you ask me.
Yeah, it is. And again, I the only little bit of worry I have here, and I don't think it's much, is that, what was it? That digital rock was one of the very first things that I remember being sold as an NFT. And what did it go for? Something like $4.5 million. And I was thinking, wow, there's $4.5 million that got flushed down the toilet. But somebody that bought it. I hope they bought it for the artwork and maybe the collector's value, because there's not a lot of liquidity in this area. To me, and this is just my opinion, Eric, I want you to give me yours and give the folks yours. But, to me, when I go out and buy a piece of artwork or I buy a collector's item, I'm holding that in the vault. That's going in the Tom Gentile vault. That's going to more than likely be passed down to my heirs. I'm not looking at it as some form of or some way to make money. Now, there may be a kind of a distribution way where you see something you like, you buy it, and then somehow you have a way of advertising it and getting it out to more people so you could turn and flip that. There are people that do that. I know that. But I'm not one of them. So, Eric, what is your take on this?
I mean, I'm not big into the art space. I'm not an artsy guy. I don't go see a piece and say, oh, I want that for my home, or I want that because I love the artist. But if I take it over to the NFT side of things and what I've been learning, because I'm like learning every day more and more about the NFT space. I own a few NFTs myself, and my reason is I own them with the hope and the chance that they gain value and I could flip them to make some money. And when you look at the community inside of NFTs, that's like the largest group of the NFT community. Most people aren't buying NFTs so that they can, just have the digital artwork because they love the artwork. Some people may. Oh, I'm double. I don't want to be double. There we go. But I personally want to see it for an investment purpose, which right now, it's risky for sure. Even more risky than crypto, which is extremely volatile itself. There's no rules, there's no guidelines, there's no charts to go by yet. So that's where we stand with that.
When I look at some of the, it all ties down to one word, and that's volatility. And I look at some of the chatter that's going on. I'm popping over, taking a look at the YouTube channel, and Nomadic is saying hello to me. Hey, Nomadic. Hi, everybody else. So many people saying hello this morning. But you can see, when you look around, volatility is our friend, is one of the comments I see. And of course, for those of you that were answering the question about Florida, there's a number of reasons I live here. It's a fantastic state. It's the sunshine state. We have sun here most of the time. But you know what? It's also a no income tax state. It's also has homestead protections that are second to none when you look across the country. There are so many reasons why I live here in Florida. My wife loves Florida. That's probably the number one reason I live here. It's not because of me. It's because of my wife, my family, who love the state. But getting back to NFTs and volatility, volatility is the word. You can't get away from it in this market, in the crypto market. And, speaking of volatility, last week, and I saw this popping up a little bit too, Eric, about volatility. We have, and I'm going to do it tomorrow for those of you that are chattering about it, Operation Surge Strike. We have, as our premium members in Operation Surge Strike is known, we've had a fantastic month of January. The month of January blew apart for the stock market. It did blow apart for cryptocurrency, but coming back in a big way, all right, based on what it is that we're doing. Everything we do, whether it's crypto through our microcurrency trader or whether it's through Operation Surge Strike, these are premium services, we use rules-based strategies. Brutus software, for instance, I'll talk about it tomorrow. And volatility trigger events, okay? We'll get into those tomorrow at 11:30. So I'll focus on volatility in the stock market tomorrow. But for right now, let's focus on what's going on with crypto. And so, Eric, I'm ready to get into a strategy session if you are.
I'm ready to go. Let's do it. And that actually leaves us some time for questions because we got a bunch of them today.
Yeah, by the way, this strategy session today is being brought to you by I Told You So. I'm just going to leave it at that, Eric. Go ahead.
That's fine. No.
How about a question you had?
No, well, I think we're going to save the questions, Tom, until the end of the show. This one was one that we were going to push towards the end. So,
okay.
Yeah, I think we're going to jump into your charts a little bit, Tom.
Let's do that. So the first chart I want to show you from I Told You So was this is a 15-day chart that we see here. And this 15-day chart has a couple of things going on with it. I'm missing one little piece of the puzzle that, this is live, guys. Live means that sometimes I forget something here or there. You know what I forgot today, Eric?
What'd you forget?
I forgot the big red mouse.
Oh,
Clifford, the big red mouse.
You're known for that mouse. There he is.
Yeah, well, I want to make sure everybody knows where I'm at.
I hear you.
And so, as you can see here, this is the last 15 days. So we did see that big fallout. And this particular big bar here was when I went in and made that big purchase. All right. Look at the top of that bar, Eric. This was at near 41,000. I bought right down in here at around 38.5. I bought halfway down the bar, and we dropped all the way down that day to 36,000. I thought, wow, maybe I need to put another buy opportunity out there. My next buy opportunity, by the way, in Bitcoin on the way down was 30,000. We didn't hit it. We hit 33,
close,
a little bit above 33, and popped right back. But we started forming a baseline here at around 36 and change, and you can see every day in this area. Now, some of you are looking at this chart and you're probably saying, Tom, this is confusing. You got some colored stuff going on here, this red and green, and then you got the black and white. What's the difference between the colored candlestick chart and the black and white candlestick chart? Okay, the colored candlestick chart is the chart of SPY, the S&P 500, right? The black and white chart is an overlay of BTC. So as you can see, as the S&P 500 was dropping, Bitcoin just fell apart on this day. And it really made, take a look at this. S&P was really kind of forming a bottom down here around 430. It was about 5 days before it started lifting off. Well, Bitcoin was already starting to make a comeback, which was showing it wanted to contract together. And it did last Friday. So we had that Friday move that moved us up quite a bit, right? Here we go, Monday. Now, the one thing that you and I both know about cryptocurrency, Eric, is that it trades on Saturdays and Sundays. So that's kind of built into this chart. It's a little weird. We build in the Saturday and Sunday to the Monday bar. The interesting thing is that Saturday and Sunday really didn't have a big move. Sunday did. And then, of course, here Monday morning, we opened right there below 42,500, and we've traded up as high as well. We're at 43.7, I think, right now. So that's where I see us on the live price. We'll get to the live charts in a moment. That's the first chart I wanted to show you is the correlation between BTC and SPY. Let's do one more. I actually have like at least four charts to show you here in this session.
Perfect. We have time for them.
Let's change S&P to QQQ. Now, this is a 15-day chart of the Qs and Bitcoin. So the Qs are red down, and then BTC is filling in the candle in black. So both of them were moving down. All right. And as you can see here, down day, down day, down day, big down day, much bigger down day for Bitcoin. Here's Bitcoin rebounding. Here's the S&P rebounding. Here's Bitcoin rebounding a little bit more, but QQQs had three more red candle days, but yet that was inconsistent what was happening with Bitcoin. So Bitcoin was trying to tell us that there was a very big resistance point being created around the 37,000, really the 37,000 price tag. Retested it last week and then lift off. Big lift off on Friday and continued lift off. While, as you can see, the Qs are not participating in this, right? The Qs, we still see the NASDAQ as really potentially overbought in some areas. And you can kind of see that where we came back to that 15-day high. That was back, was it Tuesday? And then, or Wednesday, Thursday, Friday, and here's Monday, and it just hasn't gotten above that big high. What happened that week that made the NASDAQ lift off? There was short covering, and then there was Google, and Google was the big push. Was it Apple, Google, and then of course that drop down, as we all know, was Meta platforms, and that's we're still trying to shake off the Meta platform hangover that everyone's still kind of coming into today, but not with cryptocurrency. Cryptocurrency has really taken off. Okay, so enough about the stock market, comparing it to crypto. Let's take a look at crypto itself. So here is my all-time high of BTC and the most recent low. These are closing lows. So you got to go back to, again, the end of January to get to that closing low. That closing low was 35,075.90. Yes, we had little stabs. A stab that happened 2 days later. It took us down to around that 33.5 area, right? And then where my red line is right now, or excuse me, where my red arrow is right now is pretty much that latest buy point, that $100,000 buy-in that I did on BTC, right? We also had, and I'll go back to it in just a few minutes. I'll go back to it, but we had other buy-ins that happened as well for our microcurrency traders down here at this level. We've had some nice liftoff. We're getting some liftoff now. Where is BTC at as of this moment? So this is FTX, and as you can see, BTC is trading around 43,764 is what we're seeing right now on the order book. There's the current price of BTC. And then, as you can see here, here's a current chart. We were to kind of scroll in and look at the chart that's happening. There's your current chart. There's that liftoff from last week. And you can see, really, I mean, the big things to look at, Eric, was the huge blowout day that happened back in January, end of January. And again, the huge blow up day that happened on Friday.
Nearly identical.
They have the same magnitude. That's important for everybody to see, that just as easily as people were to sell out, look at that volume on the sellout, 200 million in sellout volume that day. Now, I want to bring this into perspective. You see that move up? That move up was not based on, you might look at that and go, oh, that was based on low volume, dude. It was only 100 million on the way up. Yeah, but you know what? The smart buyers were not buying on this way up. The smart buyers were coming in here after the blowout and were slowly chomping at the bit. And so all we needed was a day of a lot less offers out there to push this higher, because all the buying came in right in here. And some of it back here, I was a little bit of it, but some of it was happening back here. But you can see that day, that average buy-in was coming in right around anywhere from around 36.5 to 38.5, and I was on the high side of that buy. But now I look back and I say, all right, this is great. This is what we wanted. We wanted a couple of things to happen. We needed a basing to happen. We needed also 3-day close above 40,000. Now 40,000 is the new support point, right? Round number support. So that leads to the next question, Eric. Where is resistance? Resistance, let's go to my stock chart or my crypto chart. We got a couple areas of resistance. We're coming into an area right now. We are coming up to the 44,000 mark. That is the new short-term resistance target that I'm looking at for crypto. That could be that we could blow through that here in a matter of hours or minutes or maybe days. But the real ones that I want those of you watching to pay attention to are 47,480 and 51,312. We have to get above these. When we get above these, Eric, when we get above those, we are clearly back in an accelerated uptrend.
So,
are
Tom,
we
you're
in an
saying
uptrend right now?
Are you saying, Tom, that now is a good time, even right now, you feel now is a good time for people to be investing into Bitcoin? That
Oh yeah, absolutely.
Okay,
Yeah,
cool.
Long term,
clarify.
absolutely. So the other thing I want to mention to everybody is that we got the first higher low. You see the lows down here at 35,000, and then we had some higher lows here around the 36,000 area. 36.5, I think, was that other area we saw a higher low. This is the first higher low we've gotten, Eric, since November, since before November, because everything else on this chart has been lower high, lower high, lower low, lower high, lower low, lower high, lower low. Wait a second. Higher low right here. We had a higher low. We had a little pullback. A lot of people were nervous last week. Uh-oh, here we go again. And, that's the Miami sound machine. They're sounding the alarm. Let's sell the Miami coin because it's going down. And, of course, we see a much greater move to the upside. First higher low. So you actually got to go back prior to November to find the last time we had a move where we were seeing higher lows and higher highs. Right? Where's the higher high come in, Eric? 44,000. Where are the big areas of resistance that we got to get through? 47.4 and 51 or 55. Excuse me, 51.3. These are my big resistance points right here. There are three of them, but obviously the first one we want to get past is 47,480 on Bitcoin. While we're at it, let's jump into Ethereum. Because of all the cryptos I look at, these are the two that are most important to me. Bitcoin, Ethereum. They have the most market cap. They have the most volume. They have the best liquidity. That's the difference between what the buyers are looking to pay for and what the sellers are looking to get on the book. All right, the book being the bids and offers. You can see here the all-time highs for Ethereum were up here at just above 4,800, so 4,810. Now, what's interesting is we came very close to getting above that. Now, that actually happened at the beginning of November. We came back at the beginning of December. That's how strong Ethereum was. Now, we saw 4,800 become below 2,400. Just like Bitcoin, we saw a 50% haircut on the price of Ethereum between beginning of November to the end of January. And Ethereum did have a big drop there that happened, right around the 3,300 area down to 2,300 very quickly. Now, a couple things that are happening with Ethereum. It hasn't really put in. I mean, it has the lows at 2,412, right, on average. It did have a pullback one day, but I mean, you go back and you look, green, 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 green. There's a red, green, 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 green. A lot of green on the screen for Ethereum. I think Ethereum is still the stronger coin, even though Bitcoin has had the most liftoff. Ethereum is the strongest that we're still seeing off of where its next stop is. The next stop for Ethereum, 33.28, 36.11. 33.28 is a very important number. That's about 10% above where we are right now, right? But take a look at the liftoff we've had right now. We've gone from roughly 2,400 to 3,000, Eric. That's 600 points. That's a 20% bump off the bottom.
Yeah,
And
Ethereum
so,
is following strong. I mean, it's when I'm looking at its 30-day, it's just about even to where it is right now. So it's doing well.
yeah, so if you look at, depending on what type of chartist that you are, and I'm talking to all of you out there, whether you're on Monday Morning Live or whether you're on YouTube, depending on what type of chartist you are, there are some folks that say if we come back more than 10% in a market, that we've entered the bear market. If we jump up more than 10% in the bear market, we're out of the bear market. In the cryptocurrency session, and in that space, I said take those numbers and double them. On an earlier session, on an earlier stream, we talked about making sure you were looking at 20s to determine bull markets, bear markets. Well, guess what? Today, this move that's happening in Ethereum today is telling us we are coming out of this short-term bear market because we've exceeded the 20% move to the upside off the bottoms. So now what's going to happen is you got more conservative buyers coming in and saying, all right, this thing's starting to slow down a little bit in terms of volatility, and it's going in the right direction. So you're going to start to see asset managers and a lot of people outside of the crypto community start to look at this and say, all right, I want to start to get back in, or maybe I'm getting back in for the first time. So I'm going to echo the comments I just said before, Eric, when you had mentioned to me, is this a good time to get into Bitcoin? Is this, and the same question, is it a good time to get into Ethereum? And the answer is yes, because now we're starting to turn from what a lot of people were saying, we're in a bear market, right? This is going to be ugly. I was even seeing down here, down in this area, this is when you find out, you separate the traders from the analysts, because a lot of analysts were out there saying, this is it. It's going to be worthless. And yet, here's a big takeaway that I learned a long time ago in the stock market, and we can use this in the crypto market. When the bad news is still coming out, which it was, when the bad news is coming out and the market stops falling, that means the sellers have exited the building, folks. And that's exactly what happened down here at the 2400 level of Ethereum. So there you go, Eric. That's my take on Ethereum. That's my take on looking at our strategy session of where we see these things going. I still like them both in the long-term perspective.
Yeah, I don't disagree with you, but Tom, that's going to take us into our microcurrency question and answer, which is going to fuel a bunch more discussion. This is my favorite time in the show, where we take people's questions and turn them into discussion topics for the rest of the day. So we have right now charting cryptos, and this is tough for me too, because I use Coinbase Pro, and it's very limited what type of charting you could use, like extremely limited. So hi, Tom. Maybe I missed it, but what is a good crypto technicals platform? My Coinbase Pro seems limited. I can't do what you're doing there. So, Tom, what do you recommend for all your charting?
I mean, there's a bunch of good ones out there, and it really depends on how much you want to dive into this. So we can talk about high level, just Bitcoin and Ethereum. So if you want a really good platform for Bitcoin and Ethereum, and again, I'm not endorsing these. I'm just telling you what I use. Thinkorswim, believe it or not, is a great platform for stocks. And if you know what the / is, you put the / in, Eric, before you type in the symbol BTC, you're able to actually get the Bitcoin futures markets up. And you're actually able to use that because, again, that correlates pretty highly with Bitcoin. And so you can use that, and you can run all their rules-based technical analysis against BTC and ETH. Those are the two that you have the opportunity to look at through Thinkorswim. That's one. The second one is, you could use something like what I have, I'm going to put on the screen right now, which is FTX. So FTX is a pretty interesting platform because what it does is that it allows you to go in and set some technical indicators as well. You have to actually register for it to utilize everything that they offer. But keep in mind, they're also a buy-sell platform, all right? And I don't endorse brokers and I don't endorse exchanges at all. I'll tell you what I like, but I'm not out here to endorse, and I'm not going to get a free coin, and I'm not going to get you a free coin. Just like, with Robinhood as a platform, I don't endorse Robinhood. I don't endorse Schwab. I don't endorse any of these guys. I use them. I'll tell you what I like, but I'm not out there to, to be very transparent. What you use is best for what fits you as a trader or investor. That I'm happy to share a few of them with you. This is another one. I will tell you what one of the things that I use the most is that I couldn't find a lot of the stuff that I wanted on the FTCs and the Thinkorswims. And also, I know those are platforms too. Tom'sOptionTools.com. Here's a shameless plug. All right. So I did create my own software years ago so that I could actually not just look at some technical indicators outside of the simplified ones that are out there on broker platforms, but also to create trading strategies around those, to create back tests. So I can run back tests. We ran a back test. I'm going to let you guys in on something. So we ran a back test on crypto-related stocks. Went back 5 years just to see. We wanted to run it against our darknet program. So we ran 5 years of, this is channeling technology, where we look at long, intermediate, and short-term channels. And Eric, 5 years on these now. Not all stocks had 5 years of data in them. So let me be straight with that. Mm-hmm. But over the 5 years, we had about an 80% success rate on those stocks, right? I'm going to be sharing more with that down the road, but I'm using the platform, my own platform, Tom'sOptionTools.com. So those are a couple good ones to look at.
Nice. Perfect. Well, we're going to move on to an NFT question right here. This one is from Zan. They're saying, afraid NFTs will tank with the rest of the coins, although this question was obviously put out there before the coin started to rebound. Not sure if I understand these NFTs and what to do with them. And I mean, I'm going to hop in here really quickly and just say, if you don't understand NFTs, if you don't know what to do with them, there is no type of charting system as of right now. There's no way to really look at any back testing like you were talking about, Tom. It's really just all gambling. If you go out there and believe in some artwork or like some NFT artwork as of right now, that's why you should be getting into it. But also just with money that you could afford to lose, because really there's no rhyme or reason to it right now. Would you agree, Tom?
Yes, but let me add one more thing. Tank like the rest of the coins. Kyber's not tanking. Kyber rebounded, Ethereum rebounded, Bitcoin rebounded, Cardano rebounded, Matic rebounded, Maker rebounded. So that's the part I don't agree with, but also a lot of that has to do with what we've been discussing for weeks that is finally happening. It's come to fruition. We're getting the rebounds that we were not only anticipating, but executing on.
Thanks, Tom. Well, let's get out of NFTs. I believe we revisit them a little bit later, but this is about Cardano, which is probably, I think it's what I'm most invested in right now. And this is asking from Giuseppe, I believe, about staking Cardano. Hey, Tom, overloading my brain with trying to pick the right staking tool for Cardano between the research reports from that microcurrency trader provides and looking at the YouTube experts out there. It's hard to pull the trigger on one. Tom, if you could provide your expertise on this subject, I'd appreciate it. And again, before I go back to you, Tom, I have quite a bit of Cardano staked, and I'm using. Yeah, it's unfortunately I bought all of it higher than it is right now, but I have it staked on a dataless wallet, which was made by the people over at Cardano. It's on my desktop, so it's not on the internet. It's a lot safer. And I'm earning a little bit more than 5% daily compounded interest. So that means whenever I get my interest, it's not daily, it's every 5 days. Every 5 days, that interest, which is in Cardano, gets reinvested into the staking pool automatically, and I get that compounded interest. So all I need is for Cardano to go back to where it was.
Let me add something very, very important that just happened. I was reading last week, there was an article that came out that there was it wasn't a lawsuit. It was an opinion. Let me just get into it. So somebody of USA versus the IRS regarding staking, where you're being paid in coin instead of paid in fiat currency. All right. So any staking that you do that is paid in coin, the IRS wanted to tax that stake immediately. That was been downturned. That actually was turned over last week and said those are deferred gains that you will be taxed on once you convert those to USD. So I just saw that last week, Eric. I don't know if you saw that, but am I telling you something you're hearing for the first time?
No, I was actually talking about it with Nick a little bit. I think the day that his show aired, maybe it was Friday, that news was there. So we did mention a little bit then, which is great
Yep.
because you could just keep investing it, keep restaking, and you're not going to have to pay any taxes until you decide that it's time to take stuff out, take your profits. So that's definitely a win for people that are big into staking. And
Yeah,
again, I see.
and I have a couple of small coins. One in particular, I know that I staked. The same thing. I was thinking, wow, I got to figure out a tax. How to deal with the tax issue because
Mhm.
now what am I doing? I'm paying U.S. dollars in tax on something I've got in cryptocurrency that I don't want to convert to U.S. dollars right away. So it becomes a little more of a gamble. That's now been taken off the table, and it makes it a lot easier for folks like myself and a lot of other folks out there that stake or or were concerned that they were going to have to pay tax on these gifted coins that you were going to receive as part of some staking process. As far as Cardano too, let's talk about Cardano for a bit. So our last buy-in was $1, but I'm not gonna sugarcoat it. I'm also in it too, just above 2. So when I look at it, I'm kind of if you look at where we're at right now, $1.50 seems to be the area that I'm in or I'm averaged into. We're currently coming off of what was about $1.20, so it too is very, very close to joining the ranks of Bitcoin and Ethereum as it's nudging that 20% off the bottom range, which would take Cardano off the bear market list as well. So I wanted to throw that out there as well to the person that had the question about Cardano.
Yeah, thanks, Tom. I mean, I like Cardano, but I don't like that it's gone down since I've gotten into it. But let's take a look here at this one. I'm going to hand this one right off to you. This is from Phil. Is a USA Fed central bank digital currency a threat to Bitcoin?
I can't tell you that if I had a nickel for every time somebody asked me about a U.S. digital currency, I'd have a lot of nickels. Um, that question has been posed to me in the past. Here's my quick answer. I do not believe it will be because think about this. A USD central bank digital currency. Do you think for a moment that they're going to have a limitation on USA FED central bank digital currency? Is there going to be 20 million of the USA coin out there in existence? Absolutely not. That thing's going to get scaled down and diluted as fast, if not faster, than the U.S. dollar. Okay, that's one reason why I don't see Bitcoin being threatened by this or any other currency out there. I mean, think about it. The two biggest countries in the world right now. If you look at the 3 big places in the world, you've got China, who absolutely has an all-out ban on cryptocurrency. You've got people moving out of China because it's affecting their livelihood. Where are they going? Probably Vancouver. That's the first spot I can think of. They're heading over here to North America, or they're heading to Europe, which has a friendlier stance on currency. So you got a country that looks at it as an absolute threat, an all-out war, an all-out ban on crypto, and you've got Europe, which is saying, yeah, you know what, we kind of like this. And then, of course, you've got areas in South America, Central America, and even the Caribbean that absolutely love Bitcoin and love cryptocurrencies to the point where they're allowing people to come in and they're able to have tax-free gains on crypto. What a smart move some of these countries are doing. They are trying to bring in the high net worth individuals to come into their country, and they know they're going to invest. They're going to invest in the land. They're going to invest in property, and they're going to invest in the local economy. That's great. Then you got the USA, which right now is kind of teeter-tottering back and forth. All right, on this being a threat. No, not only do I think that the digital currency, the U.S. dollar digital currency, will not be a threat. I think it's just going to be a reminder to those that own Bitcoin why you own Bitcoin, because you are opposite of the U.S. dollar. You are in something that started off as a collector's item. Started off as, a bunch of nerds that were looking for a way to buck the establishment. And then it became kind of a retail phenomenon, early backer phenomenon. Now it's become institutional, and it's big time. And so even the institutions look at this as an asset. It will move more and more. It's going to move more and more, like the S&P 500, like the Qs, because it's now considered an asset. It's no longer anti-establishment. It's a little bit of a mix. There's still some of that in there. If you saw what happened on the weekends, and I think the weekends are the best time to really view crypto for what it is. But you're talking about a finite cryptocurrency against something that is infinite in how much it could grow in size. And what I'm talking about is circulating volume.
Thanks, Tom. Well, we have our last two questions right now, and they kind of work together here. This one's about managing your allocations in crypto. And member asks, is converting one coin on the move up, let's say 10% on the move up, into another coin that's down 10%, a good idea as a trading strategy? Now, I've always been told, don't trade your winners to buy losers. How do you feel about it?
I completely agree with you. I think you have to have some sort of a rules-based strategy to see if this actually works. And something that we're going to be looking into, we do this with the stock market, and this is right, going back to my software again, we do this with the stock market. It's called pairs trading, where you're pairing one stock up against another. We are going to be looking into, in the not too distant future, pairs trading more and more on the crypto side, from one crypto coin to another, right? And trying to see if there are some sort of correlations there and some sort of patterns to be had. But don't go into that blindly. That's my answer.
Cool. Thank you. And that kind of brings us to our final question of the day about evaluating new tokens. And again, I'm going to take this one a little bit, but the member asks, it may actually be the same member. I'm not sure. What do you look into when you're evaluating new release of a relatively unknown coin? Now, for me, I like the safer coins. I don't like jumping into coins that are maybe a little bit more risky. I'm trying to make money, not take a risk. And I'd rather take a steady gain than a small chance of a huge gain. So Tom, I'm going to pop us on the screen right here and show what I use once I find the assets that I like. So right here, I'm on Live Coin Watch. And these are a bunch of the assets that I'm watching for one reason or another. Maybe I'm interested in them, maybe I have a little bit of money in them, or maybe I was just told to keep an eye on this. So what I like to look at, so knowing the assets that I found that I'm interested in or want to get into, I've learned that it's pretty good to look at the 30-day, right? So right now, if we look at Bitcoin on the top, it's up 6% on the 30-day. So if I were looking to invest, and let's assume that I believe in all of the assets on here and I really like all of them, I'm going to be looking for things that are down more on the 30-day. So for example, this morning, I just did a little purchase. I purchased some Polkadot, which is another protocol layer asset, one that I think is really strong. It's down 7% right now, while Bitcoin is up 6% on the 30-day, and I actually got into it while it was down 13. I also did the same thing with Cosmos, another protocol layer asset that's done really well. I believe it's really strong. It's down 10% right now. So when you average that, I mean, it's really a 16% difference from Bitcoin on the 30-day. So that's how I like to look at, after I find the coins that I like, that's how I like to choose which ones am I going to be getting into today, as long as I keep my portfolio fairly balanced. How about you, Tom? How do you find those new coins, the ones that maybe no one knows of yet?
Yeah, so it has to have, to me, it has to have some sort of, first it's got to do something to the network, to the blockchain. It's actually got to be out there to do something. It's got to be, it has to be at least in the top 100 as far as all coins market cap. I'm not going to go out and be a big fish in a small pond. Just doesn't happen. I take a more of a technical approach to it, Eric. I talked about at the top of the show. Let me just spend 60 seconds real quick. Number one,
you got it.
I look at the grand scheme of things, Fibonacci on the chart right now. I actually have Polkadot. I brought it up for you, and it too has dropped down to lows near 18. It's now trading at 22. So if you look at it, it too is coming out of the bear market. That's a great sign. The second thing I do is I look at currency waves, and I'll take a look at currency waves on this position. The third is I'll look and see if we have different channels that are happening, long, short, and intermediate term, that are giving me buying opportunities. Join me, guys. For those of you that are part of any of my services, then I invite you to our 1 o'clock show, where I'm going to get into these in much, much deeper term. Really, for our microcurrency traders, I got a full hour where we're going to go into all things microcurrency, including detailed examples of how we look at that long-term Fibonacci. We'll look at currency waves. We'll look at darknet. We'll look at our watch list today. We're going to look at so much more. Hopefully we can all get together and talk about that at 1 o'clock. Join me tomorrow, guys. We go back to stocks, Tuesday and Wednesday, all about the stock market. That's what we do here. We do three shows a week, one non-crypto. Tuesday and Wednesday, we get into stocks. So look forward to seeing you again tomorrow, same time, same channel. All right. Take care, guys. Have a great rest of your day.